Hello, welcome to Forex School Uganda. I'm Godfrey. Today, I want us to look at the Usdjpy currency pair. That's the US dollar Japanese yen currency pair. There's a trade that I'm currently in that is running. I took this trade yesterday. I want to give a breakdown of how I came to take it. It's a trade that you can actually take advantage of as well because it hasn't really moved that much. You could also take it now. This is not trading advice. Kindly remember that trading is all about probabilities. These are speculative markets, and when it comes to speculative markets, anything is possible. It could be a win, it could be a loss. So you be sure that you risk what you can lose. But overall, the fact that you are trading the higher time frames, the probabilities are usually higher. I'm a pure price action trader. This trade is based on pure price action. I want to take us through what informed my decision to take that trade, how I actually arrived at the decision to take that trade. We are going to do a top-down analysis from the higher time frames to the lower time frames to the right execution of the trade. A detailed analysis of exactly how I arrived at the decision of taking this particular trade. Now, this is the monthly time frame. You'll see that price had formed this resistance area running from the left to the right, and we see that last month with this candle here, price was able to break and close above this resistance, which ideally would have been a head and shoulders pattern, in which case if this had closed below this would have been a probable right shoulder, giving us a head and shoulders pattern like this. But what we see here is that price was able to break and close above, hence breaching the would have been right shoulder level, and so the head and shoulders pattern here does not apply. And so the fact that price was able to break and close above this resistance informs us that the structure of the market currently is bullish as far as the monthly time frame is concerned. Also, notice the fact that price formed support here, and every time it comes to this level, it rejects it. For example, it was rejected here. Price came again right here, it was rejected, and now finally when it came back to retest it, it was strongly rejected first with this candle here coming into this support area, rejected with a long rejection wick, tried again, was rejected again, and it closed above with a long rejection wick, and not only that but also closed within the range of this previous candle. As you can see, it closed above the low of the wick of the previous candle, and then finally we see that it took off to the upside with a strong bullish momentum candle, and that's a candle that we like to know as the engulfing candle, engulfing the two previous monthly candles. Remember, this is the monthly time frame, and this the last month's candle engulfed two months candles. This is heavy bullish momentum, and so it informs us that the structure of the market is strongly bullish. The other thing not to forget is that price is actually making a series of higher highs and higher lows. This is a higher high, this is a higher low, a low that is higher than the previous low, and after a higher low forming, we expect another higher high, as the pattern or as the character of the market is at the moment, that is forming higher highs and higher lows. The other thing also, if we use our trend line here and draw it to the upside, you can clearly see that the market is trending to the upside. Well, it kind of broke below here, but just as quickly as it broke below, it very fast broke back above, which would ideally make this appear like it's a fake breakout to the downside. And so the structure of the market as far as the monthly perspective is concerned is bullish. So we are going to drop down to the weekly time frame to see what perspective we get from it. Now, this is a weekly time frame. When we look at it, you'll see the price had been trending below this high here previously, with price reaching this high. It was rejected to the downside, came again, retested it, was rejected, tried again, was rejected again, before finally it was able to break above. But after breaking above, it moved down to retest it, was rejected, meaning that this is a strong area of both support and resistance. And then it continued to the upside, but then it came back down, and look at how much volume, how much momentum it had to come with to be able to break below it. This is not a small candle. It took heavy bearish volume or momentum to be able to break below this area of support, meaning that this is a very strong area. To break below it, it had to take this huge momentum to break below it. And now we see that price then came back into this area of resistance to retest it. Now notice something here. This candle here coming into the resistance area is heavily strong. You can see the size of it, the momentum with which it came to the upside. But then after here, the size of the candle started reducing, meaning that the volume was reducing, or we could say that this resistance area here was starting to stop price from moving ahead to the upside. But then also now notice this candle here. This candle's coming smaller, indicating reduction of volume heading into this resistance area here. We ideally would have expected price to reverse and start heading to the downside, but volume came in. Compare the size of this candle to these previous two. It had to take a lot of volume or momentum to be able to break above this area here, meaning that this is a strong area, and for price to break above it, it takes huge volume. Price has to come in so strongly, the bulls have to come in so strongly to be able to break above this area here of resistance. And after breaking above it, we see that price retraced to retest this area with this bearish candle. Price was held to the upside, and then we see it bouncing off to the upside with this bullish candle here, which closed with a wick to the upside. Now, this wick with which it closed, you realize this is a wick that is to be filled by price. So we believe that this is a wick that is supposed to be attracting or pulling price to the upside to fill it, and so our bias remains strongly bullish as far as the weekly perspective is concerned. You'll also notice on this weekly time frame that price kind of had created this range here just after breaking above this resistance area here. It created some kind of a range here, and after breaking below it to the downside, price has now broken back into this range here, and so we expect price to move up to come and fill this range to the upside. You can also see clearly that price is trending to the upside, and so the structure of the market is really strongly bullish as far as the weekly perspective is concerned. So the monthly perspective is bullish, the weekly perspective is bullish. We're going to drop down to the daily time frame to see what perspective we get from it. This is the daily time frame, and you'll notice that price previously was making a series of lower lows and lower highs, lower low, a lower high, a lower low and a lower high, which is typical of a downtrending market. But then when it came to this level here, it tried to create a new lower low, but price was failed in its downward movement, and instead came and broke back above this resistance area that had been created during the formation of the lower high. Now we know that when the market is making a series of lower lows and lower highs, it's a lower low and a lower high. When it's making a series of lower lows and lower highs, the structure of the market is bearish. Now at this point, after failing to make a new lower low, and it instead created a new higher high, that indicated change of character. It's basically the change of market structure from now a downtrending market to an upward trending market, from a bearish market to a bullish market. And now from this point we see price begin to make a series of higher highs and higher lows. It's a higher high, a higher low, a higher high, a higher low, and after the formation of this higher low, we expect the market to continue to the upside to form a new higher high as the character or the structure of the market is at the moment. Now, the other thing to notice is that this was an area of resistance before. The price was able to break above, and after breaking above, we see a retracement to come and retest it. And after retracing and retesting it, we see that on this very next candle right here, price bounced away from it with a long rejection wick, what we know as a hammer or a pin bar. This indicates the rejection of lower prices with bullish volume coming into the market, and so we expect to see this volume continue driving price to the upside to form a new high. Also, while moving to the upside, breaking through this resistance area, we see that price moved impulsively to the upside, followed by this correction. And after an impulse and correction, what do you expect to see in the market? We expect another impulsive move in the market to complete what we know as the impulse, correction, and impulse formation in the market. So that also adds to our set of confluences to inform our buyers as bullish. The other thing also is if we take our trend line and draw it from this area here to the upside, we see the price is trending to the upside with a rejection here, a rejection here, a rejection as well here, a rejection here again, and a rejection here. Of course, we see it here trying to retest it again, but it's been rejected again. So I don't see any other way but the way to the upside. Now, the markets are purely speculative, and so anything can happen. It's all about probabilities. Your role is just to do the analysis and follow the analysis that you have done. And from it, we can pick that the market is strongly bullish, and that's why we had to take a buy trade. This is not recommendation to anyone to take this trade. This is not trading advice. This is just sharing my analysis. But if anyone wanted to take the same trade, the setup is still valid. Price hasn't really moved away from the high of this candle here, and so one could take the same trade now if they're really interested in it. But you're completely responsible for your loss. Be ready to bear the blame on yourself for the loss should it lose, but also be ready to credit yourself and celebrate should it turn out to be a winner. When we use our Fibonacci tool here and measure from the low of the impulsive move to the high of the impulsive move, you'll notice that in confluence with this support area right here is the 50% Fibonacci retracement level. And we see that price moved down, came into this 61.8 golden Fibonacci ratio, was rejected, and price closed above the 50% Fibonacci retracement level. And we see the price retraced again, came and retested the 50% Fibonacci retracement level, and was rejected again. So the confluence of both this support area as well as the Fibonacci level act as a strong confluence to hold price to the upside, and that's why we anticipate that price will continue moving to the upside courtesy of these rejection areas right here, which are seemingly strong enough, stopping price from dropping to the downside below. But like I said, remember, this is all probabilities and anything can happen. But the bias, based on the technical analysis that we have at the moment, is strongly bullish. Now, just for good measure, let me drop a time frame lower. That's to the 8-hour time frame. And when you look at this 8-hour time frame, something you realize here, of course, first of all, price is trending to the upside with rejection at this trend line here, here as well, here again, here is again, here as well, and finally this last retest, and hopefully a bounce off coming to the upside. You also notice in this 8-hour time frame that price was making lower lows and lower highs. These are lower low, but then from here it made a new higher high after a lower low, came back down, has created a new lower high, and so that tells us as well that after dropping to this upward trend line, the character of the market as far as the 8-hour perspective is concerned has now changed from a bearish one to a bullish one with the creation of a new higher high, which changes the market structure or the character of the market from a bearish one to a bullish one. Next, when you look closely, you'll also realize that this has formed what appears to be a head and shoulders, an inverted head and shoulders pattern, which is a bullish pattern in this instance. And so from this bullish pattern of an inverted heads and shoulders, we can safely say that the market is trending to the upside. Remember, we are just trying to put confluences together to inform our trading decision technically. Now, for those that like trading the Quasimodo way of trading, there's something here. You see a price made a low, then a high, then a lower low, and after the lower low it went on to create a new higher high. Now, with the Quasimodo way of trading, you're looking at this support area at the left shoulder level, and you see that price is currently retesting it at this point here, which is in confluence with this upward trend line here, as well as this support area coming from the left at the left shoulder area. And we see that the setup was formed in line with this, both the trend line and the support area as well as the confirmation of a strong bullish engulfing candle while creating this impulsive move away from the trend line. Those that trade the Quasimodo style will understand this, but not to confuse you, let me not go into that, but it's all about conferences being put together to inform your decision to take or execute a trade to whichever direction you see according to the structure of the market at the moment. Now I want us to look at the order flow analysis to see what the big boys are doing in the market. That's the big players such as banks and hedge funds, so we can see what direction they're executing their trades in as far as this Usdjpy currency pair is concerned. Now, looking at the order flow analysis of the Japanese yen, remember, every instrument on the market is traded against the US dollar. You will see with the latest filing that the longs were 78,000 while the shorts in the yen were 125,000. So they are shorting more than they are longing, which means they are selling more of the yen than they are buying. Remember, no instrument on the exchange market is traded in isolation. No. It has to be an instrument that is changed or exchanged for the other. And in this case, it is the Japanese yen traded against the US dollar. And so if they are shorting the Japanese yen, they are inversely buying the US dollar. And the amounts have to be the same. And so if you see a short in the yen of 125,000, it means it is a long in the US dollar. Since remember, the US dollar is the base currency in the Usdjpy currency pair. And so if they have shorted 125,000 yen positions, that means they have longed 125,000 US dollar positions. And so now the fact that it's that the US dollar is the base currency in the Usdjpy currency pair, it means that the trajectory will be to the upside. And you'll also realize that the shorts have actually been increasing from 47,000, then 52,000, 66,000, 89,000, 100,000. So they've been increasing the number of shorts as far as the yen as an instrument is concerned. And you could see here that the longs were actually reducing. Here, 11,000 longs were closed. They added 3,000, which wasn't in any way comparable to the ones they had closed initially. Then they closed more, 7,000 positions. They closed 14,000 positions, closed 4,000 positions, all the while adding the short positions in the yen. 8,000 added, 5,000 added, 14,000 added, 23,000 added. Now, the shorts are being added onto while the longs are being closed. The fact that this instrument is being traded against the dollar like every instrument on the exchange market, just for a simple fact that it is the Japanese yen traded against the dollar, and the fact that the US dollar is the base currency in the pair. Now that means that they actually, when they are shorting, when they are adding short positions on the JPY instrument, they are inversely adding the same positions on the USD, but on the long or the buy side. That's why we are seeing the Usdjpy trending to the upside. And so based on this data, the order flow analysis, I would expect price to continue moving to the upside. Like I said, these are speculative markets, but based on the technicals that we have analyzed, coupled with now this order flow analysis that we have analyzed, which is basically the positions of the big time traders such as banks and hedge funds, those that have the amounts of money whose trade volumes move the markets. And we are seeing here that they are clearly short on the yen and hence inversely long on the US dollar. Based on these put together, the technicals and the order flow analysis, my bias is strongly bullish, anticipating the upward trend on the Usdjpy to continue. So coming back to the chart, the position that I took on Friday was based on the data that I've explained to you, especially technically, but I've also showed you the order flow analysis, such as what the big boys of the markets or in the markets are doing. My entry is basically at the low of this area here that we've seen on the 8-hour time frame as a left shoulder. Coming back to the daily time frame, I used my Fibonacci tool and measured this corrective move in the market to give me a target area, which is at this minus 27 Fibonacci extension level. And so my entry was right here, which was a buy position with a stop loss at the low of this candle here and a take profit right up here. That's the position that I'm currently in. As you can see right here to the left, which is a position, there are actually 3 positions that I entered with, 3 buy positions that are currently running. That's it for today. And if you're new to the channel, kindly subscribe, like and share this video, and also remember to turn on the notification so you're alerted every time I post new content on the channel. Be on the lookout for more videos that will be dropping in, and I can guarantee you there will be very good gems to help you take your trading to the next level. Thanks for watching.